What's going on, Juju Gang? 3:12 Pacific time. I know, an odd time for a stream, but I've got two lovely Tesla friends here with me. Nicholas Gibbs from Investing in Grain and Farzad Mesbahi from self-named, self-titled channel. I hope everyone's doing well. Let me know if my audio is coming in clear, if our audio is coming in clear in the chat. But how's it going, gents?
You're right next to him. You got to go first, bro.
It's going good. It's going good. It's been a while since I've been on YouTube. Sorry for that. But yeah, no, it's going great, especially being sandwiched between these two lovely gentlemen.
Damn, it's a brown sandwich. Actually, it's a white sandwich, technically.
It's an Oreo.
It's an Oreo. Yeah, it's actually an Oreo. Best start ever.
How's it going with you, Farzad?
Good, man. I've just been really doing the opposite of what Nick said. I'm doing the hardcore YouTube grind, and it's been great, man. Just getting to hang out with the YouTube community and the Twitter community, and just keep following what's going on in the EV industry, man. It's been a wild start to the year, but there's so much to talk about, and I'm excited to get into it with y'all for sure.
Oh, indeed. There's a lot to talk about, as there always is. The agenda for the day, in case you're wondering, first we'll talk a little bit about macro, J. Powell, where we kind of see the stock market as a whole heading. Then we'll get into Tesla Energy. Bradford Ferguson out of Halter Ferguson Financial, Matt Smith out of Good Soil released their new report. By the way, thanks for throwing in where you guys are tuning in from, Steady State Country, wherever you guys feel comfortable sharing. Feel free to throw that in, and I'll get to some of them. But first, I have to address a controversy, folks. And Farzad and Nick, I haven't filled you in on this. Apparently, I've been spotted driving a Tahoe. Mr. Juju, I was spotted, and shout out to you. I think this is Ganeshan in the chat who was tagging me in this. Kumar Nathan on Twitter. Look, folks, I know driving this gas guzzler around California is not on brand really for me, but apparently I've been caught. Yeah, apparently I've been caught. But you can't hate on me so much for this license plate, though, can you?
No. Hey, I mean,
blame, it's pretty rock solid.
I blame Elon. This is what happens when Yashu asks for the subscription for FSD nonstop, and Elon doesn't do it. So,
fuck yeah. Oh yeah. I'm sorry. There's a few things that I.
Has it been 30 seconds? No, you're good.
That one hit. That one
hit. You rarely hear Yashu dropping the F bomb. I'm more curious about. Yeah. Sorry. What is that symbol on the upper right hand corner?
We may not want to know.
I think that's Texas. I don't know. Texas something? You Texas.
Anyways,
the subscription hits. The subscription hits with me, Nick. I really am looking forward to getting FST subscription up here and being able to try it. But Canadians, we're second-class citizens a little bit, it feels like, so we don't have it up here. But
hey, you're the only other country in the entire world that has FSD beta. Think about it.
Where Australia doesn't have it yet either?
No, it's not. They say North America. It's Mexico doesn't have it. It's just Canada, United States.
Oh, okay. V says that logo is the Minnesota Twins baseball team.
Okay. Oh, okay. Yeah. I don't watch baseball.
I feel like we should have known that.
Yeah, I don't watch inferior sports. Oh,
wait,
we can talk basketball.
Definitely not hockey. No way.
Yikes.
Get out of here.
Okay, well, I think that'll start another debate. But anyways, that controversy behind us. Let's talk J. Powell. Let's talk macro. By the way, Tesla's sitting on, and I'll just read it out here. 196.81 sitting on Tesla at the moment. It seems like it wants to break that 200 mark, but it's just not getting the excuse it needs to. But let's start with J. Powell. Nick, let's start with you and what your thoughts were when you were listening to J. Powell speak today.
Yeah, so you could tell J. Powell was threading a needle, but it seemed like the little hole in that needle that makes threading a needle so difficult, it seemed like that hole was actually pretty big this time. He seemed calm, collected. He didn't seem too worried about what he was going to say, and I think that spoke volumes because the market's rallied. I mean, just look at Tesla, since we're going to talk about Tesla a lot, put that in perspective. It's up 96% in a month and a half, maybe 2 months. J. Powell could have easily corrected the markets if he thought it necessary. Even with the jobs number, he had every excuse to. He had a layup, right? A wide open layup with no one around him. And he could have really corrected the market. Chose not to because he didn't think it was necessary, which tells me a few things. It tells me, one, it's very clear that they're slowing down, right? We all see that. They're coming to the end of the rate hikes. They've gone from 75 to 50. Now it's 25. His rhetoric's become a little more dovish. He chose today not to send the markets down, extremely hard. It says a lot about where they're at. It almost feels like they're on the verge of, I still think they're going to get the 5, but they're definitely becoming more data dependent, and they're looking for that soft landing. So although a lot of the stuff he said was very calculated, essentially same rhetoric that he's been saying the whole time, but it seemed more promising to me, especially when he could have very clearly sent the markets down to help his cause.
So I actually didn't catch the speech, but I saw the markets react to it. Was he still pushing the disinflation like verbiage? Was he still harping on that?
Yeah. So what he said was that we are starting to see, I forget the exact words, but he said we're starting to see like the cycle of disinflation take hold. And he said like we're just starting that. Right. So
okay.
Yeah, so he definitely stayed on that narrative. I forget who was interviewing him, but they even asked him, if he would still say disinflation the same amount of times as he did. So I thought it was kind of funny, but yeah, he definitely stayed on that same rhetoric.
So basically a continuation of what was said last week on Wednesday. No, because there was the one, I actually liked your tweet from yesterday or this morning where you think there will be a rug pull today. And I mean, the last time we had something similar to this where there was some dovish language or language that was interpreted dovishly by the markets. A week later, Jay Powell came out and freaking just said, "Nope, y'all are crazy. This ain't happening again." So the fact that didn't happen this time, or didn't seem to have happened, I think it's very interesting to follow through. My takeaway from Jay Powell is that typically the Federal Reserve, they seem to be a few months behind the ball at any given time, or a month or two behind the ball, where they say some sort of verbiage, and then like 1 or 2 months later they act on it. So, like the one that really kind of comes to mind is with their initial transitory commentary around inflation back in the day. And then a few months later, it was like hardcore go into it. But there was about a 1 or 2 month period where they were like kind of saying, well, we got to wait and see. We got to wait and see. And then all of a sudden they're like, not transitory, rate hikes. We're going to crush the freaking economy, essentially. Right. He didn't say that, but kind of that's how people felt about it. So I wonder if now with this verbiage that we're getting now from Jerome Powell and the Fed, if we're going to see something similar where for the next, say, 4 to 6 weeks, we're going to get this sort of, hey, this inflation, there is dropping prices. We're starting to see it on the whole. But then what are we going to see the same thing in a month or two where it's like, oh my God, we've went too far, start dropping rates immediately. And we don't get this sort of steady rate increase. Because the two things that I'm really following that tell me that this could happen is, I mean, housing and auto is still kind of a disaster. It's kind of a disaster zone. We're starting to see used car prices starting to come up a little bit in some areas, but new car prices are falling through the roof, and new houses are still frozen solid from most of the markets that I'm seeing. So at some point, and except for eggs are like double the price now, apparently, at least in the United States. So
they talked about that.
they did really
a little bit.
Okay. So I'm curious to see if I don't know, man. Some of the numbers around macro really have me scared, to be honest. Like, I just don't see, like, the fact that we have record high number of people that are paycheck to paycheck, but we have record low unemployment seems like a bad place to be. Like, everybody's got a job that wants one, but everybody's living paycheck to paycheck. That seems odd to me, but I don't know if you guys have a different take.
I got a couple questions about that, but I'd like to hear what Yashu thinks first about this.
Yeah.
Yeah, no, actually, go ahead, Nick, before you lose your train of thought. I'll chime in.
Okay. Yeah, I was just going to say, like, I think a lot of those things have to be taken with a grain of salt, because, like, even what you just said there, Farzad, people living paycheck to paycheck. How would anybody ever know if you're living paycheck to paycheck? If I'm living paycheck to paycheck? Like, that's... maybe there's a very obvious way where they know that I'm not aware of, but I don't think most people would know if I'm living paycheck to paycheck. I don't think there's a way anyone could know if I am. So
yeah, you got to be careful with those surveys. You do.
Yeah, it's like I take all that with a grain of salt. The this is not to say that I think that there's no issues. I think there's a ton of cracks in the economy, but right now, I think in the short to medium term, things are kind of bullish, and I think they're probably going to stay like that for a little bit. And I'm all about it, especially with March 1st coming up. But not to go off on too much of a tangent. Look at Farzad. What do
Farzad
you
needs
think?
to ask
March
something.
first.
Okay, go
No,
ahead.
I was gonna Google. I was gonna pull up the methodology for that survey. I don't know if y'all have it in front of you, but I can look into it and see what the methodology was. Okay, I'm gonna research it for like 30 seconds.
So yes, I mean, at the end of the day, I find it what bears are really worried about is not about inflation at this point. What they're worried about is Jay Powell's talks dovish. We don't care about interest rates being this high. Then we have a second bout of inflation. And that second bout of inflation is really what kills us. That debt cap balance, like in the 70s, we saw with inflation. That's what bears are really worried about. So for Jay Powell to come out and really not be ultra hawkish today, even talk down the jobs report, like you said, Nick, and basically say, like, yeah, well, a lot of this might be to immigration. It's interesting to see. Now, the market obviously liked it. Nasdaq finishing up 2% for the day, Tesla finishing up 1%. But just again, I agree with the skepticism because we've run so much in so few amount of time, like in a month and a half, 2 months. Tesla's up year to date 82%. I mean, it's kind of nuts to think about. Of course, Tesla was down substantially, so that little bounce could help. But when a stock's up 82% year to date and it's not even Valentine's Day yet, I mean, we have to really have perspective in terms of how much further it can, like how much gas is left in the tank. Now, I, just as much as anyone else, would love to be totally off base and Tesla goes to $300 tomorrow. But I think it's important to just be prudent at this level, especially at $200 level. It's a psychological barrier. There is going to be sellers up there. We've seen it. I mean, 197.50 is the high of the day. Tesla's still having a hard time breaking through. And still at the same time, housing is the big one, Farzad. I agree with that. That's really the elephant in the room, so to speak, with everything is because housing is always lagging, right? 6 to 9 months to a year out, depending on metrics used and different locales. And as it stands right now, especially in big areas, housing is just not getting the same amount of sales volume it was getting. It's not necessarily in all areas that prices are fully collapsing. It's that not a lot of people are bothering to sell. And so if no transactions are going through, it's just an illiquid market. At least it is here as well. So the big question there is, does the bond market properly call the Fed's bluff to end the year? The bond market is pricing in a 2% cut to rates from where we are right now by the end of the year. Let's just say even 1%. Jay Powell's already said, look, we're not cutting rates. Like, we don't anticipate cutting rates. In fact, we actually are going to continue to hike rates from here. So one of these two data points have to be off. Of course, you would think, okay, let's just trust what Jay Powell says and what the FOMC says. But remember, they talk to jawbone. They talk to give a signal to change consumer influence. And if the bond market is calling the bluff and saying inflation's over, this story's over, do we get, and we've seen it, we've gotten a rally here, but do we see continued growth? Because I don't think we're out of the bear market just yet. It's a matter of opinion still, whether we are. But technically speaking, we would have to see more continued strength from here even to be able to comfortably say that we're out of this bear market.
Yeah.
Go ahead, Nick.
Go ahead. Now you go.
No, I was going to say, like, I'm really battling with the whole dynamic of recession, no recession based on the Fed's actions as well. Because part of me is like, are people just not going to allow a recession to happen regardless of what happened? Like what happens with the Fed and everything? If there's all these signals that come out and say, well, GDP is still growing, there's still record employment, people are still spending, people are still going on vacations. Like, we can have all the metrics we want. But if humans are just going to be the psychological beings that they have been forever, and they're like, you know what, COVID sucked so bad that I'm just going to live my life, and I don't care if I have more credit card debt, I will figure it out because I'm not going to put my life on hold again. I wonder how much of that dynamic is going to help bolster the economy for the next few years, So, like, regardless of what and I wonder if that's what the sort of data points and science the Fed and Jerome Powell are using against that backdrop. that they'll just continue seeing this environment where people are going to still spend and live their life and bolster the economy. But I hope it doesn't send a signal that says, well, rates are now 7% because people are just spending and going crazy into debt and we're fine. We'll just figure it out. I don't know if you guys have any thoughts around that, if I'm taking it too off course, but like I feel like the context of where we live right now is also important to think about, because I really do think the economy ultimately is psychological. And this freaking book that I'm reading, bro, is like opening my eyes so much. Seriously, I don't know if you guys have read that book before. And I'm not trying to plug
blurry.
it, but like, you know, it's an amazing book.
What is it? It's
really
blurry.
is. Oh, the Psychology of Money.
Oh,
Yeah.
Well, of course, consumer spending and the way consumers feel is going to dictate how they spend, and how they spend is going to dictate whether or not that affects economy for sure. But I think another thing to think about is, and I pulled up the Atlanta Fed GDP Now estimate. It's currently positive GDP growth estimated for Q1 around 2%. The blue chip consensus, if you ask the street, though, is negative 2%. And
Whoa.
so it's quite the divergence of what we're seeing of what the street's thinking versus what the Atlanta Fed GDP Now is estimating. So what has to happen, and if GDP growth is negative for 2 quarters in a row, that's technically a recession. And if we're technically in a recession, that means we need to stimulate the economy. If we need to stimulate the economy, we need to lower interest rates. So that's the bet that the street is making, is saying, look, though, and remember, at the end of the day, I mean, last year's numbers of GDP growth, last year's GDP numbers were not very relatively strong because of inflation being so high as well. Remember, it's real GDP that we care about, which is net of inflation. So we don't care about nominal GDP growth. So there's a couple caveats there, but I get what you're saying. However, I just don't see a way that we don't have a recession. That's just my point of view at the moment.
Okay.
So okay. So I have a few thoughts on all of that. One, I think we've had a recession already. I know that's not a popular opinion, but I think we have had a recession. I think we might still be in a recession right now, and we might be coming out of it. But I hate the term of like recession means like you can only have a bear market apparently if you're in a recession, and I don't agree with that. I think we can continue to get out of a recession and we still have a bear market. Right. I don't know if you guys disagree with that, or if there's like a different definition of what it is, and I'm just mixing up words here and just saying a lot of nonsense. But I guess what I'm saying is like I can see us having a weaker stock market, even though we are getting better.
Strong
Inflation's
economy.
coming down. Things, yeah, exactly. And so my worries isn't so much about like a deep, dark, horrible recession. Like that's really not my worry at all when it comes to the economy. My worry is all or is an R, right? Plural.
Yeah.
Sorry, I'm like correcting myself here. My concern is all of the cracks I see going on right now. And when it came to inflation and companies that were tanking and all that, the first ones that really took the hit were tech stocks, right? And I feel like tech stocks are the first ones to move and react to anything. And right now we're seeing all these layoffs happen in the tech industry. I'm in the tech industry. Like I'm seeing it. I'm telling you, if you look at my LinkedIn, it is so like, it's so sad to see. I mean, like, again, I mentioned I haven't been on YouTube in a while. It's because I'm busting my rear end. It's a weird way to say it, but I'm busting it at work because I need to make sure I'm valuable, right? Because I want to keep working. Not that I'm at risk of anything, but we all are at a certain point. But I think that's eventually going to filter through the entire economy, through all segments to a certain extent. And so I think that will slow things down. But then, and I hate the phrase or to say that this time's different, there are fundamental things that are different this time than any other recession or period inflation that we've ever had. And that's one, we had the pandemic thing. All right. So that's one aspect of it. I don't buy this whole notion that people are out and traveling saying, YOLO, I'm going to live my life because of COVID. Look, are you guys doing that? I'm still living my life. I've been living my life pretty much normal the whole time. Like, I'm not sitting there like, oh, I got stimulus money. Like, nobody has stimulus money left. They got like $3,000. They spent it. All right. They probably spent it day one when they got it. So that's to me, a false narrative. I don't think people are just all of a sudden like living their life for the first time. But what I do see happening is all these layoffs happening. I know you do. I see all these layoffs happening. I see things slowing down in certain ways, but I also feel like and this is where things are different this time, in my opinion. I'm seeing a resurgence in our country, in the United States, North America in general, with manufacturing. The world is changing. We are divesting away. We're still going to have globalization, but we're divesting away from these kind of frenemy type environments. And that's going to have a real impact that can potentially blunt recession or what can happen, what should happen traditionally based on what you've seen in the past. And so I just think there's so many different moving parts for anyone to say that they just know what's going to happen or this has happened before. Oh, these yield curves are inverted. Look, I get it. We have seen trends in the past before, but they don't always pan out. And there's a lot of things that are fundamentally different this time around than before. But I do think there are issues that are very clear, and I'm very conservative right now.
So you think the foundation of the U.S. economy is strong? Is that a fair statement? Okay.
I think the potential is right. I think we're on the precipice of a manufacturing, and this is North America, really. I think we're on the precipices. Wow, precipices. Precipice. Thank you. I feel like Elon on the earnings call.
Statistics or whatever.
Yeah. Of a manufacturing renaissance here, right? So I think there's a lot of good things that could happen, but no, we have a spending issue, not just the government, individuals as a populace. The fact that people have $1,000 car loans, that's insane to me. That's absolutely insane. You know, it's seen housing, I see housing not really coming down at all, yet I do see these deals happening. And I know too intimately where somebody, instead of paying $1 million for a house, the buyer said, hey, I'll pay $800 and I'll pay $200,000 for the washer and dryer in the hot tub. Like there's like these like little things that are happening that you kind of like might miss out on what's happening. And that's not a one-off. Like I've known a couple of things like that have happened. But so I see there's lots of cracks, a lot of cracks. But I think that it might be blunted by everything else that's happening. And really, to tie it back to Tesla, it's Tesla that's creating all this. Tesla is making manufacturing in North America cool again, right? Making manufacturing in general cool again. You know, and then you see everything happening with like Microsoft now and ChatGPT and all this. It's just there's so much difference that's happened that we haven't had in the past that you can't discount how that might blunt the effects of what should happen based on yield curve inversions, based on inflation, based on what the Fed's doing. And I think the Fed's kind of in a nice spot. They're like, hey, we'll sit back. We'll just chill out. We'll ride this car, 25 basis point. We'll do every other meeting. We'll do a rate hike, but we'll just sit there and we'll let things slowly play out. And then we can just take our foot off the accelerator.
Okay. I mean, that's a lot of really good points, to be honest. I'm trying to think of like...
I was hoping for one, so great.
No, there's at least more than one. I do think the manufacturing renaissance is a great point. I think that's why I asked you, do you think the foundation of the economy is strong? Because like when I think about like any country's long-term strength from an economic perspective, I think it was really anchored around building things and making things. The service economy can only carry you for so long, right? So you need a place of strong manufacturing, and the fact that that's coming back, I think lends itself to really good things over time. 100% agree with you there. But when you mentioned the $1,000 car loan and like people carrying a lot of debt and things like that, don't you think at some point that breaks? Like
Yes.
if people start losing their jobs and the Fed actually raises interest rates enough where certain sectors come to a halt that are employing millions of people, and then you have this cascading effect of people losing their jobs, that if this survey is right or wrong, insinuates that they already can't afford what they have, and now all of a sudden they don't have a job, and the labor market's going to be super loose, I guess, in a sense, where people are going to be losing their jobs. Then there's going to be a ton more competition for the same jobs. I feel like that doesn't seem like a good recipe unless the net number of jobs increases dramatically here in the next 12 months. And so do you think the manufacturing stuff that's happening here is really going to create enough jobs to make that happen? Like I know Giga Austin will be one of them. They'll probably create 5,000 jobs this year, but who else is creating 5,000 jobs in a sector that is part of that really strong foundation of the economy? Maybe I'm not well versed enough. It's just that's how I'm thinking about it. At some point, this collapses, and then the assets that you have in housing and cars that you're paying $1,000 a month on your car loan, on your gas car, if the electric car starts taking off, and then the new car prices are plummeting from ICE makers because they can't sell their gas cars and they're literally trying to clear them off the lots, you're going to be thousands of dollars underwater on a car payment you can't afford, and then all of a sudden you lose your job. That doesn't seem like a good recipe. So, and that's where my head goes to.
I agree.
You have
I
to
don't
be
know.
careful. You have to be careful extrapolating from
Never.
microeconomics
I'm kidding.
to macro. Yeah, clearly you're never. And because the arguments you use, though, you got to be careful, because that's the same arguments you would use against, or if you were for pro-union of gas cars. That's what they would tell you. Farzad, how dare you want to kill our industry? Because our industry employs millions of people. It helps the economy. But there is an underlying factor here, and that is what we're going for and what shifts long-term, what really contributes to long-term economic growth independent of anything, is technological adaptation and growth of tech. Now, greater than 50% of the GDP is services. Like, don't forget about that. Manufacturing is not overrated, but you can't overstate the effect of manufacturing. Services you can't overstate the effect of. That's where the growth comes from. That's, it's us taking letters and numbers and turning them into code and turning them into software. And this is like coming up with stuff from nothing, right? This is why the service-based economy is where the world is today, at least the first world.
The one
So
that
you gotta keep that in
ChatGPT
mind.
is disrupting.
Yeah, that's perfect, because technological disruption is what advances future growth. I talk about the icebox industry a lot. One of my favorite economic professors told us a story about in South America about how they resisted refrigeration when it first came out, because they had a huge icebox industry, and the people that would ride around in the horses to deliver the ice, to fix the boxes, to service, and they're like, if we just adopt refrigeration, we're going to put all these people out of business. And I forget what country it was. And that's short-term thinking that, oh, this is going to kill these jobs and this is going to kill our economy. It's not sustainable. And they sacrificed their long-term economic growth to say, look, this refrigeration is going to free us up for those people to maybe be unemployed, let's say, not knowing what to do. But guess what? Creative minds, humans will adapt. We'll think of something else. We're overstaffed in this area. There'll be another problem that we'll deal with. And this is how we'll focus on bigger and better problems over the long haul. So these are short versus long-term issues, but the bigger, go ahead.
No, I was going to say, so during that transition, was there a period of really bad economic times, or was it a clean transition?
I don't know about the specifics, but I'll tell you that particular area, the key takeaway was that they shot themselves in the foot by not adapting to technological change faster. That company that wants to, like, for example, Microsoft with GPT. Sure, they might have a harder time short term to fluctuate and go through all the technological change, but it's always better to adopt technological change and to go in the frontier of it, because all of the benefits that you might have are going to be coming to fruition over the next several decades after.
100%. Yeah, so I 100% agree with you there. I'm wondering if the transition to get there is a 3 to 5 year slog where it's going to be really painful because of the different variables we just walk through, with folks just being in again, if these data sets are correct, in a weird financial situation with their assets dropping in price because the demand has halted for those things, and there aren't enough jobs in the economy for them to take, because companies are cutting jobs because the economy is slowing. Like there is it's like, it's not a clean transition, and that's sort of what I'm thinking through. So yeah, of course, over a long enough time period, the economy is going to be more than fine, because we'll figure it out. That's what humans do, right? We'll figure it out. There hasn't been a time in human history where we haven't figured it out at some point. Thank God, so far, knock on wood, right? But there are periods of transition that are super weird, and I'm just wondering if now we're primed for one of those super weird transitions. But I could be wrong. I don't know. You're 100%. I do think there's a lot to be said for the technological investments we're making, and it opening up opportunity and things for people. But I'm going to shut up because my dog.
Well,
Go ahead, Nick.
Yeah. Well, I was going to ask him, like, what exactly is it he thinks is going to cause this weird transition. So I
think he's probably referring to the EV transition, right? Is that what you're referring to, Farzad?
Yeah, I mean, all of them. The EV transition, when you go back, the anything in history that has automated away jobs or has disrupted away jobs, like the freaking self checkout stuff. Like the milk industry, right? Like you have people. We used to have milkmen that would show up with fresh milk, and then we figured out how to homogenize milk. And all of a sudden, the milkman became obsolete. But then, the economy was much smaller back then. You had a lot less moving parts, and it was a lot more manual and labor intensive. I just think if there is a big disruption that shows up in our current time, and I'm not just talking about like automation starting to come in. I'm talking about like the economy itself. If we're losing jobs right now and there are not enough jobs to replace them, we have a recession. There's going to be a lot of people that have too much debt where there are not enough jobs for people to be able to afford to pay their debt. And and I think that has lasting implications. But again, that is based on me being right in my assumption, and I have no idea. I'm just kind of walking through where my head is at about where the next, and if we have a car industry again through this EV transition that's not prepared for this, it will not help. You're just going to have more job losses, less workers in the supply chain, less workers in the manufacturing plants, less workers at the suppliers, and I don't know. I might be too doom and gloom right now. It's just, but these are my thoughts. This is kind of where my head's at.
Yeah. I agree with what you're saying about. So just taking it way back, I do think that the economy looks too good right now. So I do think there are cracks in the economy. But as far as what you're saying there, I'm not worried about the transition of any technology for anything. I think it'll be smooth. Invariably, whenever some new technology comes out, it's like 10 new jobs for whatever one job was lost, right? I mean, you just see what happened with the iPhone App Store, how many more jobs that created. I mean, just look at the internet alone, right? The internet, yes, it's probably taking away so many jobs, but it's creating so many jobs as well. Again, you can look at it from like eBay to Craigslist to OnlyFans to whatever, right? It's given people YouTube, what we're doing right now, right? So many people have been able to create jobs out of technology like this that I think it's way more than it will ever take away. You mentioned self-checkout. All right, well, the technology for that, how many people have to maintain that equipment? How many engineers in the back end working on it, the innovation for it, right? And then what's next after that? What Amazon's doing with the grab and go stuff. I mean, like it goes on and on, right? So there's many different I think benefits that come out of it. What I see though with the economy though, I think we do have a spending issue. I think we have a debt issue, and this isn't just the government. I know a lot of people talk about the government. We do, people, the citizens, and I don't know if it's all over the world or if it's just this country, but in this country, we have an addiction to spending and taking on debt. And when I hear someone like Chamath talking about austerity, someone like Chamath, a billionaire, saying, "Oh no, I'm going to drive to wherever all those billionaires go for vacation," where he went with Jason, "but I'm going to drive there instead of taking my private jet." It's like, all right, maybe we should all be looking at this a little bit as a bigger problem. And so that's more so where I see a lot of the cracks, that plus the layoffs in tech. Like that's where I see my concern.
Yeah.
Yeah, we got to be careful. Yeah,
Sorry.
I'll pull it up here. But we got to be careful also not to conflate short-term economic cycles with long-term doom and gloom. Economic cycles are boom and bust. That's normal, right? But here's the link you wanted me to pull up. This is the civilian labor force participation rate
in the United States. So this is what percentage of the labor force is participating in the economy by month in the United States. So January 2023 is at what, 62.2%, something like that. If you hover over that last point right there, 62.4. Yeah. So that was the last reading that came in. And then it's still, if you go to sort of the middle 2011s through the 2017s or whatever. So so go more to the right, kind of like that middle area. Yeah. So 62.9, 62.8. So there's kind of like, we're not quite back yet at the labor rate participation where we're at before COVID. There's like a gap. And if you go right before COVID too, what was that? Like 63.3%. So there's about a 1% gap in labor participation. Like we're not back to where we were. There's less jobs. There's less people working.
Yeah.
Right. So go ahead.
Go ahead. I'll let you finish your point.
No, please.
Well, I was going to say, like, I've been wondering about this nonstop because everybody talks about this. Everybody talks about this, and I hear the same thing on and on. Oh, well, people are just, their stimulus money hasn't ran out. Like, I'm sorry, there was not that much stimulus money given out on a per person basis to to be able to go years without work. So to me, it's either one, however we're collecting this data, it's very poor and not an actual reflection, or two, there is, well, it goes back to that first point. There's somewhere something that those people are doing that it's not being accounted for. Is it YouTube? Is it, I like the joke, OnlyFans? What is it that there's this disconnect? Or is it that really people are just on welfare and they're like, oh, we make bank here. Why would we go to work for an extra $200 a month? No point. Like, what do you guys think? Like, what is this? I have not been able to figure this out.
I think there's two things. I think one is that I think that the selling kidney. I think there are two things going on. I think one is the entrepreneurs. I think there's way more entrepreneurs now than there were before COVID, because I do think COVID was a human reset. And I forget what podcast I was listening to. I want to say it was Joe Rogan and Lex Fridman, or I forget who it was, or it was All In maybe, where they talked about how because of COVID and everything, like I'm a perfect example of this. During the COVID period, I decided to exit the labor force and follow my passions because I could. And I wonder how many people decided to do that. So that's some percentage of that. I think that's not being properly accounted. And I think the other one could be that people are deciding to start families. I think maybe like they're going back to, instead of both parents work or continue growing their family, instead of both parents working nonstop, practice some austerity, live within your means. One of the parents stay home, be it the mom or the dad, and they can, grow their family. And then at the same time, maybe more, I think there was a small baby boom during COVID as well. So maybe it's a reflection of that. But and if you have less people working, that means there is theoretically, unless you have something in the economy that is replacing that output, that means a shrinking economy. And at some point, we're going to have to pay the price for that. And that's where I get concerned. Is like, where are the things that have shored up that gap? It could be I don't know. It could be freaking Tesla. I have no freaking idea. But these are like the numbers I'm trying to sift through, and it's very hard for me to find the right number that describes it.
Yeah, and we can move on from this, but I just worry you're placing too much emphasis on certain data points that micro might matter, but macro are just a longer term
That's fair.
story of ebb and flow. It is what it is. And
Okay.
yeah, there might be less people at work, but it could be that the people that do work make way more for the family and they can be breadwinners. Like, and data is not always great in terms of across decades. People's styles change, people travel. My old business partner, he travels to Dubai, Europe, Spain. He's a tax resident there. He's Canadian, but he doesn't report now, so he wouldn't be a metric. So there's so many certain caveats now that wasn't, like, Zoom's made so much stuff. Like, look at what we're doing. It's made stuff, like Nick said, so much more possible. So we'll take that.
That's fair.
I want to move.
If you're
on
right,
to,
I'll wear a Canucks jersey. Okay. If you're right.
At this point, I don't even know if I want to be seen in a Canucks jersey. That's how bad we are this year, last 2 years. Any Canucks fans in the chat, even if you're a Canucks hater, feel free to hate on me for it. It's just, it's ugly right now, man. It is. And thanks for doing that. Like, my mood just went from 100 to like a 50.
Sorry.
I'm kidding.
We can talk about the Lightning if you want.
Oh, okay. Let's move on. Tesla Energy. So Bradford Ferguson, like I said, has a brand new Tesla stock report out with his mega pack valuation breakdown with Matt, friend of the show as well. I encourage everyone to go check it out there. Obviously, this just came out, so I don't expect any of us to have read some of this, but it seems like with Brad's, let me just go down to his base case here. He talks about the Inflation Reduction Act, how Tesla Energy will benefit from that. He talks about him actually projecting gross margins, EBITDA margins, that is, to be around 40% in 2025. And then the bulk of it in the base case, I think I had it here for a second, is so Brad says, we believe it's unlikely that Tesla will reach its 3 terawatt-hour battery target by 2030, as lithium mining capacity is a significant bottleneck. For our projection, though, we use a significant we use an amount of storage, stationary storage, and cars would need roughly 1.5 terawatt hours of batteries by 2030. And then he goes on to say, our projections result in an EBITDA of $59.3 billion in 2025 and $205 billion in 2030. Huge. As can be seen in the table and the results of the base case ranging from between 287 for Tesla stock to 354. This is not a 1-year price target. Between that range is what we feel the business is worth today, not financial advice. Do your own research. Thoughts on Tesla Energy, folks? It's it's one of those things where everyone wants to price everything in because it seems like when Tesla fell so much, everyone forgot about the auto story and was like, screw the auto story. What else is new and sexy out there? But it's hard to dismiss it as well because the energy story is quite significant. Elon's been on record to say it's going to be as big, if not bigger, than the auto business. Where are you guys' heads at with the auto or with the energy side? We'll start with you, Nick.
Oh, I think it's going to be a lot slower of a grind than what a lot of people think. I think the potential is enormous. I mean, like the TAM for that it's Petra, right? Like it's everything. It's everything keeps our lights on. So that's obvious. But I think ramping that up is going to take a long time. It's not easy. And to replace what's already there, I think people, to your point, Yasha, I think people think it's as easy as build a car, sell a car. It's not. I think it's way more complicated. Yes, they have the pipeline. They have plenty of orders ready to go. But in order to ramp up the volume, get it out there, get it installed, use the software, get to a point where it's scalable, it's efficient, and to a point where they can actually start to make real margins on it. I think that has a way, way longer cycle than what we know. I mean, with the auto, I mean, just even the auto industry, like I'm sitting here saying like it's so easy, so quick, but it wasn't. Look how long it took Tesla to go from where they were to now where they have these margins. I would say potentially put that same type of time frame since they started Tesla Energy, which I don't even know when you would actually designate that, and put that same time frame on there. It's not something that I would be YOLOing. Like I'm more optimistic about FSD going into level 5 than I am of energy ramping up to being margins and scaled to the equivalent of the auto business of Tesla.
Wow. By when? By what date are you saying that? 2025?
For level 5? I think this year. So at the end of this year.
Oh, okay. Okay. Wow. Okay.
Yeah, well, Farzad's on my look at that smile.
I'm just glad you said it first.
Let's not get off base though. Energy thoughts, Farzad. Your thoughts.
So that $15 billion number was that for the 60 billion? Everything. In 2025.
Yes. In 2025, yes.
And so how much of that was energy? Did they say?
I'm gonna have to fully read this report. I'm gonna have to open the PDF and look at it later.
Yeah,
but
so can I caveat? I haven't read any of this or looked at it, so I'm just speaking with seeing 2 seconds of something. So for all I know, I read all that and I'm like, no.
Stand by your word, bro. Come on. So the 60 billion in 2025 actually aligns pretty closely to where I am at from a total business perspective. So Q4 2025, I have Tesla doing about 15 billion in net income. So if you kind of just like do 4x that, it's 60 billion. So it's right around that area for 2025. And then 2030, they're saying 200 billion for everything, EBITDA, correct?
Farzad, translate that into stock price for people.
Okay. So 15 billion in net income in a quarter, that's 60 billion per year in net income. And then, so what's a PE you would give Tesla in 2025 based on their growth rate? Like 30, 40?
30?
Let's say 30, be conservative, yeah.
30. So what is 60 times 30? 1.8? 1.8 trillion?
1.8.
Right? So 1.8 trillion. So 1.8 trillion. What's a Tesla's market cap right now? 615, I think, on 190 some odd dollars.
620, yeah.
620?
Yes.
So then you
triple
times
minus the discount, of course, that you place on that value.
Right.
Yeah. So, sorry to make you do this math, but this way people can like have a
567. 567.
Nice.
Yeah, that's what the stock price is at. $1.8 trillion market cap at 30 PE.
And on the energy note though, so how much of that how much of that 60 do you have? And it can be a rough ballpark of that is
Yeah.
energy. Is it quarter, half,
So
mostly auto?
energy revenue is 5.8 in that quarter, and the costs is 3.7. So it's 2 times 4 is 8. So it's
Okay, well, that's very small.
15%, 15%, call it.
Hmm.
Yeah. So it's still a slow ramp.
Hmm.
I'm with Nick. I really do think the ramp of energy will take. I'm seeing some folks on Twitter have very, 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 very aggressive targets for energy,
Right.
and they have every right
Yeah.
to do that. I do think though the battery bottleneck is huge. I just don't see how they're going to be able to, unless they have some magic sauce with 4680 where they're going to be able to 10x everything with 1/10 of the supply. That's fine. I think it will be a significant part of the business long term, and I think there is a chance Wall Street prices that in early and says this is obviously where you're going, and you have a moat around this because you've locked down the supply chain and nobody can get in. I could see that happening, but that's just me predicting stock price. I'm not going to do that. So,
Yeah.
but I do think it's. I agree with Nick that I think by 2025, full self driving will be adding more to the bottom line than energy. I think that is a fair statement.
It might be doing it
So-
now.
Let
It
me
might be
ask,
doing it now.
Let me ask the chat. Well, okay, so let's not, and by the way, when you say full self-driving, do you mean robo-taxi revenue or do you mean software sales? for vehicles?
Software as a
Software
service,
sales.
call it.
Yes.
Yeah.
Exactly.
Okay.
SaaS.
So
Yeah.
so I'm going to ask the chat. In 2025, let's say July 4th, 2025, what is hitting
date.
Tesla's bottom line more? Is it FSD revenue? Is that contributing more to net income, or is it Tesla energy? Of course, today it's FSD.
Yo,
because-
can I steal that for a Twitter poll?
Yeah, absolutely. Go for it. But throw it in the chat and in the YouTube chat as well, so I can see what the general sentiment is. I would do a YouTube poll, but YouTube polls kind of suck. I like when people comment it instead. And you guys are both on the FSD side of that, right? Like,
What do you think?
bar none.
I know you did one drive, a couple
I
months
did one
ago?
drive a couple months ago. Yeah, it was iffy. It was iffy. It was super cool to see, but it wasn't there just yet. Now, I think the way that I phrased that question, it's a gimme for me. It has to be FSD because today they even make money off of FSD, right? But if I were to shimmy that a little bit and say, look, just off robo-taxi revenue, I would say energy at that point. Chat, by the way, is kind of mixed. FSD, energy. Someone's throwing in Tesla bot. Energy. Actually, no, it's mostly energy. A couple of, maybe 20% FSD so far, but mostly people saying energy. So, folks, are you both very ultra bulls on FSD so outlandishly? And you guys both try FSD on a consistent basis. So, I mean, there is that.
Can I tell you a big difference? And
Scale.
this is, well, okay, so here's the big difference. You used it once and you're saying it's iffy, right?
Mm-hmm.
The biggest thing I'm not saying to go in there and YOLO and just sit in the back seat by any means. Well, you couldn't do that, right? It wouldn't let you. But what I'm saying is the more you drive it, the more you trust it. And the more you realize, like before those like, oh crap, or oh, I don't trust it moments, or oh, I think it's gonna do a mistake. The more you realize, like, oh no, it's doing something right. Or maybe, oh, this is just not quite the way I would have done it. And like you gain this like trust with it. And then you increase the bandwidth of letting it do what it does. So it was like I noticed that when I was watching you, like I was just watching your interaction the first time because it was the same way I was, right? Like I think we all go through that same, yeah, exactly. But then there's like this metamorphosis that happens, and then you really realize after a certain amount of hours with it where it actually is. And again, just if you just go back and just take one person to be like a good litmus test. Like we'll use Omar, right? Because he's very consistent. Look at his videos from the very beginning of 2022, like very beginning of 2022. Look at where the progress was there. Now look at it where it was at the end of 2022. I'm telling you right now, we are much closer at the beginning of 2023. If we make that same type of we have less progress to hit to get there.
Well, yes. So devil's advocate, of course, we're going to have less progress because we're at that point of the curve now where the distance might be short, but the difficulty level gets exponentially higher to fix all these edge cases.
So, yes, and that's always everyone's devil's advocate, right? But as far as I get back here, I need you for my point.
By the way,
Sorry,
shout out to you, John, for the super chat.
Sorry.
Farzad as a witness. What's happening, which is wild, and we're all excited for this next 11 version, right? 11.3. But what's happening, you would think that the progress would be getting, or the improvements would be like diminishing, right? The improvements would be less and less. The improvements are getting bigger. And if you don't believe me, just watch the episodes that Farzad's put up with his wife. She went from saying, yeah, it's 5 to 7 years away, to saying she thinks it'll be done this year. That's how much it's changing. The improvements are increasing. They're not getting like shallower and less. It's literally like we're hitting this like, I don't know how else to say it.
Okay. So
you got to experience it in volume.
I'm going to take your bottled up optimism for FSD and incorporate it into myself and say, perfect. I agree with you, Nick, there. Now, the second bottleneck of this is, for me, has always been, it's kind of my cop-out answer for FSD, is governments are not gonna allow this right away. Like this, the red tape argument is still another argument that mentally it's hard for me to get over. And I've said this multiple times. At the first signal of FSD really being close, like I mean less than a year away, is we hear about a municipality, a city that's partnering up with Tesla to do a case study or to do the first pilot project of robotaxis in the wild. I still don't think it's going to be an update that we get with V11, and then all of a sudden everyone's like, hey, by the way, this like fully works and we've all had zero intervention. Like, I don't think we're going to wake up to that. It's going to have to be some sort of pilot project. So I guess debate me on that.
Okay.
I'll let you Farzad.
So I don't think you need the government to give full approval for robotaxi network for Tesla to be able to recognize revenue of full self-driving, because it will be such a value add to the driver that people will pay the upcharge for it. It's not going to be the $15,000 up front, but it'll be the $300 a month. It'll be the $400 a month, you know? So that's what I think.
What's the value? Right? That's the
question. Of course you can use it.
No,
you can use it.
You can use it. You can use it, but I'm talking about the robotaxi specific monetization of this. If we're talking about robotaxi revenue and how Tesla's gonna, okay.
But check this out. Let's do the math. So what's going to be Tesla's fleet in 2025? They have 3.5 million cars right now.
But in North America or in Canada and United States.
We'll do some ratios. Check this out. So they have 3.5 million cars right now. They're going to do what, 1.8 this year? Do you want to say 2? Is 2 fair?
2. You can get 2 for rough math.
2 million in 2023. How many in 2024?
I'll give you the total fleet number. It's going to be 12-ish, 12.5-ish million, 13 million, give or take.
Okay. How many are going to be in the US?
Let's say 60%, 50%. I don't know. Is that too high? Because China.
Let's say 35%.
Okay.
Fair enough. Okay.
Yeah.
So that's 12. Wait, I messed something up. 12.5 so just do like in the fleet.
Yeah.
Times 0.35. Yeah.
Okay.
So 4.4 million cars. Okay. What's going to be my assumption is that 80% of those people by 2025 will be paying for full self-driving, because it's going to be such a value add to their drive. Like, they're not even going to need, like, forget about robotaxi completely. I think people will pay for full self-driving to get in their car and not have to drive. And at a certain price, people will do that. And I think 80% of people that buy a Tesla will get that software. And let's say Tesla charges their current $200 a month right now. Okay, so $200 a month times 12. That's $10.5 billion in EBITDA in 2025, just from that option in 2025, from 80% of the U.S. fleet in 2025. And we said energy. Go ahead.
Yeah, I think 80% would, for me to get to 80%, I would have to think people can monetize this. That's how you get to the 80% number. Is almost everyone has this because they can make money off of it.
But you wouldn't. Yeah. So you wouldn't choose the option. So say you had a Tesla right now. You have a Model 3, right? Model Y?
Yeah.
Model 3. You wouldn't pay $200 a month where you wouldn't have to drive?
This guy wants it so bad.
I'm trying not to think about it for myself. Now look, okay.
No, but honestly,
I have to still sit in the
answer the question. Like, would you pay $200 a month to get in your car and you wouldn't have to drive? You still technically have to pay attention, but you wouldn't have to drive ever. And it will do it perfectly 100% of the time.
Yasha has a point, though. He's biased.
Look, no, I'm definitely biased. I'm trying to remove, obviously, what I would say to this.
Yeah.
I don't know, man. If I still have to sit in the car and it drives, and sometimes it's gonna do certain decisions where I don't want it to, I don't think 80% of people, if you did a survey, are gonna say yes to that. I think it
No.
might be
But
like
that second
50%.
part, no, that second part goes away. That they
Yes,
figured that out by
exactly.
2025.
Yeah,
It's just it's gonna drive you.
that part where you sometimes have to do stuff. We're there now. That's where we are now.
Right.
What
Exactly.
we're saying is you'll be able to, like Mercedes, right? Mercedes, like Mickey Mouse thing that they have where it's like,
In
oh
traffic at 35
yeah,
miles an hour.
yeah, but where they're saying like, yeah, you can watch something on, you can watch Netflix, you can play a video game, whatever, all this stuff, right? Where Ford is saying like, yeah, their commercials were like, yeah,
Yeah.
we can do hands free, like all that. Like we're talking about really being able to do that, really being able to disconnect. That's what we're talking about.
So, for the record, I'm totally on your side. I'm trying to play devil's advocate. I even have a video out from like 2 years ago where I go through FSD modeling just with the features it has. So I'm going to play devil's advocate. Now, let's say you get to a point where you don't have to drive, but you can't monetize it. Will the take rate really be 80% at that point if you can't monetize? Like, I think 80% is, I can put this into the fleet. Why would I not? Because overnight I could just let this thing make me money on a Friday afternoon or on a Friday night, Saturday night. It'll make money in town and then it'll come back home and park itself. 80+% take rate at that point. At 80,
I don't know, man.
At $200 per month for 80% of people, I don't know if 80%. I think that might be too high.
I disagree.
But anyways, use 25 in your projection for a second. What number do we get on the bottom line?
10.5 billion.
25.
Using
Insane.
25%.
25% take rate.
Oh, 25% take rate? Okay,
Yeah,
so
so
what's
2.5
not
billion.
80%.
2.5 billion.
yeah, roughly 3 billion.
Okay.
Yeah.
So and that's per year.
Per year just in the US. 25% take rate. Yeah.
And that's all pretty much to the bottom line.
Yeah.
That, I mean, of course the software side excites me, but of course and I guess what I like about that model is that you can assume that government the government can't tell you not to use this thing because you're behind the wheel
Correct.
technically.
I think there is a threshold where people would buy true luxury. So what is true luxury in a car? Like where you don't have to drive. To me, that's what it sounds like. True luxury, and you have a screen next to you. Theoretically, you can't use it at that time. But if you just get in your car and you can avoid all the crazy traffic and just allow it to take you from point A to point B for $200 a month, I feel like I feel like a significant percentage of the population would pay that upcharge. I could be 100% wrong. And I see people in the comments are like, some people are like, you're crazy. Fine, but I think it's that game changing. And I would sure as hell pay for it. I personally would.
I just want to tie. Well, you already did. I want to tie back to what Yashu was saying. So, Yashu, your actual question was like how it rolls out and government regulation, all that. I think that those roads are already being paved. Pun intended there. But they're being paved right now by Waymo, by Cruise, by Mercedes, by Ford. Right? They're dealing with all those headaches for Tesla. So Tesla won't have to deal with any of those. Tesla's not even calling it level 3 or anything. They're saying it's level 2. And I think what ends up happening is they will get to a point where they essentially have reached that milestone and they'll still keep people in the vehicle. And not until they have, I think Elon actually said it recently, but like I have so much brain fog from other stuff right now. But Elon recently like gave a number of how many miles they would need to have as proof, as evidence. And they're not there yet, but I think there's a certain point where after we have enough proof that, hey, we've had these people behind the wheel, they've been driving, zero disengagements from point A to point B, we have all the telemetrics for it, we can show to you regulators, like, why can't we do this? Especially when Waymo and Cruise are already doing it. And hey, by the way, we have less interventions, we have less accidents, we have less everything. Like it's going to be a no-brainer. And then on top of that, just let me round this point off. It's not going to matter. It's not going to be a federal thing. Just the way insurance isn't on a national thing in the United States. It's a state by state thing. It's going to be the same way. And I'm telling you right now, Florida will be the first state to say, come on with it. We'll take it. We'll play with it. We want to be the tech hub, right? Texas is going to be like, let's go. We're all about this. Vegas? Yeah, exactly. So I think there are going to be plenty of places that are going to do that. And then guess what happens? When people travel, people are going to go back home and be like, why the hell don't we have this? That's what happened with Uber. That's what happened with Lyft, right? People said that will never happen. In New York, it will never happen. With the yellow taxi, the medallion, it will never happen.
That's what I'm saying.
Look at it now.
Exactly. Yeah. Okay. So we get to this level, and for the record, you guys I think I don't want to put words in your mouth. You guys said this year is what you're expecting, or within a year from now for FST.
For the scenario we painted, where you can be in the car and have essentially what Mercedes is saying or is promising at 35 miles an hour or whatever. Like we're saying, like you can actually be in the car. It can do everything from point to point, no human interaction, but you're still there, right? It's gonna take time for them to build and have production for robo taxis and all of that, right? It's a Trojan horse. That's what's happening here. It's one big Trojan horse.
Okay, Farzad, you're still on the timeline for this year.
Yeah, I mean this year for them making a feature complete for sure. I think the take rate, it's a trust thing, right? It's a trust thing. That's what it really comes down to. Is people have to trust it, and people. I think usually what happens is there's an assumption that the population will not want to do it because they've been doing it for so long, for so many years. But I think once the majority of the population experience, that's fine. And Charlie's point is phenomenal. The problem is people actually enjoy driving, especially a Tesla. I don't want to pay to not drive it. It's part of owning the car. Beautiful. What I would argue is that that's 20% of the population. I think 80% of the
that's 5% of the time you enjoy driving.
Exactly.
You're telling me you enjoy driving when you're going out to the bars or going out to dinner?
Some people
me you enjoy driving when you're sitting there stuck in traffic? You're telling me you're enjoying driving? No one enjoys driving to the bar when they're like, oh, how am I going to get home? Like, oh, I'm going to risk a DUI? For what? I'm going to risk someone else for what? Like
in that, but so in that case right there, Nick, that's what we need robotaxis for. Because how would the government be able to police that you were on FSD behind the wheel and you weren't actually driving this thing? You could have just been driving and just now tell me that you're on FSD and it's totally fine. For that to actually be a viable use case, it would have to be robotaxi. You would have to be in the back seat, not behind the wheel.
That's a good point. I'm just making a bigger argument in general for robotaxis.
But if the technology is good enough to do it, why wouldn't people pay for it? That's I think that's where I'm landing at. Like I get it. Like there's like governments will have to technically say, hey, for you to not pay attention, you have to we have to give you legality, but it doesn't force Tesla to shut down the program. They could still say driver assist feature for $200. I don't care. $50 a month. Pick the number, whatever that number is. If Tesla has a driver assist feature that is so good that you literally don't have to drive, but you're still required to drive, there is a price people will pay for that. That could be $200 a month. That could be $50 a month. But that's my point.
That I'm on board with.
That's my point.
No,
that's my point. No, and I think that number is big enough that it will definitely offset. It will be bigger than energy by 2025. That's how I'm thinking about it. Yeah. I could be wrong, but that's how I'm thinking about it.
Just to again go back to that point where you enjoy driving. Okay, I get it. You enjoy driving. You love driving your Tesla. Yeah, makes two of us. Maybe you enjoy driving, going out to dinner, going to the bar, or whatever. And maybe you don't anticipate on having that extra glass of wine or that extra beer or whatever. But then you do. Now, would you rather have a car, or at that point, you're going to say, well, I like driving so much, I'm just going to drive anyways? Or you're going to say, all right, let's and make sure we get there safe. Right? Like it becomes
that sound effect.
Yeah, that wasn't great. Yeah.
It was the wrong pitch. Wrong key, bro.
what we're debating about, and by the way, this is quite healthy for us to have, is not the end destination, it's the variables. What's the take rate? What's the price? Do people still pay for it even if it's not level 5? And I think we all agree that they would. Yeah, Nick?
Yeah. So on that point, this is where I think there's going to be a moment. Mark my words, all right? There's going to be a moment where something happens where people are like, why is the text I got from you green? It's not blue, right? Like for iPhone people, you know what I'm talking about. There's going to be a moment where you have a moment like where ChatGPT just proliferated through the entire world. You're going to have a moment like that once Tesla does what they're doing. The reason it hasn't happened yet is because it's not done and because it is expensive, and be able to get it requires an expensive vehicle, right? So there are some roadblocks to it. But mark my words, there's going to be a moment where this essentially goes viral, where everybody's like, oh my God, what is happening here? And at that point, it'll be game, set, match. It's going to happen. It's happened with everything. It always happens. It just hasn't happened yet.
I'm really comforted by the fact that there's so many Tesla bulls, shout out to the Juju gang, that think this is going to take a lot longer than Nick and I are saying. And that gives me a lot of joy, because that tells me that the gap is widening. And I get to drive this thing every day. And it's a symptom of Elon has overpromised and underdelivered for a long time. It's not his fault. I'm not saying it's his fault, but it's one of the symptoms. It's like, it's going to be here, it's not. 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 And more people are getting exposed to it now, where they've never had it before, where they haven't seen the progress and they haven't seen the exponential nature of the improvements. I think I'm very happy that we're where we are right now, because there is very healthy debate from both sides, and we can really stew these points in a pot and figure out where they go. But I'm 100% in agreement with Nick that at some point this thing will be undeniable, and it's probably a lot closer than people think.
Well,
You guys, I'm my take?
Yeah,
He thinks it will never happen.
On FSD.
No, I know that's not true. Well, I mean, so just this for everybody who, just joined, because I'm sure people are just joining now. Yashu had one experience with it, correct? In California, I think.
No, here in Vancouver.
Okay, in Vancouver. So based off that one experience, what are your thoughts on it? When you left, were you like, maybe I need to temper my expectations on this? Were you like, oh, okay, I can see, but it's gonna be like a few more years? Like, what was your impression?
Yes. Yeah, more of that. Because first I thought it was super cool because I have the same car, and I realized if all I did was put in my credit card info and bought this wireless software overnight, I could also be testing this thing, which I found was super neat because I don't have FSD on my car. But there was too many disengagements. There's too many simple things where I was like, it's not understanding that this is a non-pass through and it has to detour around, or that this is a right only lane. There was too many of those times. And I didn't leave going, oh, this sucks. Not at all, because I thought it was super cool. I love that I could see the potential in it. But I didn't think, oh, this is a month or two away. And shout out to the subscriber that actually brought me there. He told me, yeah, this is cool, but what's cooler is how in the last 3 months it's evolved to where it's at today. You look at it at one state, and it's great that you got this chance to ride it, but I wish you could see the months prior where all the other mistakes it made that it's now fixed. So caveat there, of course, I didn't get to see that. I saw it at a one point in time in a state, but my perspective is also healthy, because the person that's going to join the robotaxi and get a car, he or she, like, they don't care about the progress. They care about, do I feel safe in this car? Do I feel safe in this car? And can it get me from point A to point B? And the cool nerds that we are, we love talking about the progress, looking at the videos, but the end consumer is like, if they have one bad experience using this thing, guess what? They're probably not going to try it ever again. My mom, she one time almost tripped on an escalator, she said, growing up. To this day, she has a hard time getting on escalators. People get scarred from these kind of things. And I'd imagine being in a driverless car, unless you're a very tech-oriented person, would probably be a scary thing. So I think it's important to discern. There's the robotaxi value of this, which is epic, exponential, massive, game-changing. And then there's the little bit of a based solution of like, hey, you have Teslas, you can subscribe into this add-on package, and you know what? It's a modest amount of money right to the bottom line, and we can project that out as well. So I think it's important to distinguish those two areas of the same software.
Great point. Couldn't agree more.
Is your mom okay?
Yeah, my mom's fine. When I was growing up, I was like, I thought I made fun of her so much, but now I get it. People get scarred from stuff. So
picture this little girl falling on an escalator. I'm like, oh, poor little girl.
She's one of those, she like stops at the front of the escalator, waits for the perfect timing, and then gets on it, and then like really gets ready to get off. I know a couple people like that.
Now I feel bad for laughing. I'm sorry.
No, it's okay.
Yes, he laughs again.
He's still laughing.
I have a weird sense of humor.
Farzad.
I apologize.
But
people were calling me Andrew Tate last time. It was great. I'm like,
Oh,
I'm
shut
getting
up.
ready to be canceled. Yeah, it was great.
Is it because of
Producer wife.
producer wife? Yeah.
Yeah.
Yeah,
God forbid.
yeah. So I mean, but look, it's way better that we're having these conversations about stuff that could potentially happen than be sitting here talking about, no offense, insert legacy auto company, that, you know, these really aren't these aren't really scalable options. What's cool about Tesla is they get the software right. It's one night overnight they send this and they ship it out to everyone, right? That, you know, feasibly can get it in North America. It's like it's seconds away should they get to that software update.
Yeah.
We can get into hardware debates another day, but you know, but with the drawdowns that we've had with Tesla stock and, you know, $200 sitting on Tesla, it doesn't really even seem like you have to be that far-fetched to talk about stuff like energy, or talk like talk about stuff like FSD, because that, you know, what it was a $350 billion market cap last month. I mean, it's been like 30 days. And at that level, if Tesla's going to sell the amount of cars that we all sitting here think that they're going to sell at the margins we think they're going to sell, then this is just the cherry on top. Now, of course, the 2023 is a year of execution. It's very possible that Tesla does 2 million cars this year. It's very possible, like you guys said, Tesla does FSD this year. They have to prove it to us, though. They have to go out and do it. None of the, and to you know, they've operated amazingly throughout force majeures in the last few years. Who would have guessed, with China, lockdown, COVID, chip shortages, now the new fake chip shortage happening only for select few legacy auto companies. You know, Tesla's done really well operating in these environments. I am super excited. 2023 is the first full year that, cross my fingers, we don't have to talk about all of the force majeures that we've been talking about for the last 3 years now.
Yeah.
Yeah.
Great.
So,
well said.
thoughts? Anything to add?
It's perfectly said.
Sorry.
What?
Just the way you said that, that was perfect. You're a god. you're the goat. Like,
I gotta give credit where credit's due, bro. Yeah. Come on.
He's like, I'm ending my channel. There's not enough room on YouTube for both of us.
Oh my god.
No, I was gonna ask. So, all right. So, taking it back to economics and the run we've had, what's your guys' take? I mean, I have egg on my face thinking before is like, we ran too much, and that's when we were at like 150, 140. I was like, nah, it's got to pull back. Like, this is 50-40% run in like a week and a half. Like, there's no way. Now we're sitting here at 96-97%. Like, what are your thoughts? And again, I'm not saying this to like time the market, but for anyone who thinks that we're just going to go back to 420 overnight, and if you think that's healthy, you're wrong. That's like a crash diet, right? You're just going to fall right back into your bad habits. So just curious, what are your guys' thoughts on that?
Yeah, I think we probably pull back at least to the 21 or pardon me, at least to the 9 moving average, which is around 180. The big question is, I mean, today's strength was actually decent. It was kind of a yo-yo day, but we actually finished close enough to high of day where I'm like, maybe we do break 200 before we break back down into the 180-ish area. But again, these are small bumps up and down. Do I see us going below 100? Now, that's the big question that it seems like everyone was going to say yes a month ago, and we're at $108. It would have made sense. The big question is, if we do see another second half of the crash, like everyone's trying to say, do we break back down? And the good news is, if Tesla falls 50% from here, we're back to where we were a month ago anyway. So who cares? That's kind of my attitude at this point.
Yeah. For me, it's like I'm more interested to see how Tesla reports on Q1 and how their margins are impacted by the recent price decreases and now increases in the United States, which, by the way, I think the Model Y is going to increase again based on there's 4 new Model Ys in inventory in the entire United States. 4.
Yeah, I saw that.
So I want to see how they don't increase prices again, which will help bolster margins. I think if they can prove out in Q1 that their margins are above 20%, it could settle a lot of fears from an earnings perspective for the year, which I think a lot of the stock price movement is based on. If that was to prove out somewhere, and again, not financial advice, I have no freaking idea here, but I think somewhere between $200 to $300 probably makes sense after Q1 earnings. And then it all depends on how quickly and how fast they ramp up to, say, the 2 million per year target. that Tesla has not set out for 2023, and how Cybertruck ramps in parallel to that goal. And if there really isn't a recession and we have a soft landing, and there is a economy that can support good pricing power from Tesla, and there is a massive move towards EVs, and there's a lot of demand around that area, and energy ramps starts ramping the way some people are talking about, I think all bets are off. And I have no idea what happens. It just really comes down to what multiple is the market willing to give Tesla under that assumption. And if the economy's strong, the recession fears are gone, and it's clear that Tesla has a commanding lead and they're only growing faster. And if we know what the compact car and robotaxi is going to look like, and we have some idea into how to think about that part of the business with Investor Day coming up in 3/1, that seems to me like a lot of catalysts, but I don't want to make any strong assumptions around what that means for the stock price. I actually did a video today where I walked through my earnings expectations for 2023, base and bull. My bear case is $81. My base case is $194. My bull case is $413. So somewhere in between, I think, is where we're going to be this year.
I think you missed only $80.
Yeah.
Neither of you helped me think about this clearly. You guys just left me with even more ambiguity. Look, this is what I'm seeing, especially today, as you could imagine. I definitely had CNBC on just to listen in the background. Before Jerome Powell spoke, everyone was talking about, what are you doing? Don't you see what's going on? Inflation's dead. The economy's recovering. Look at this. This is a good thing. Slow down. After Jerome speaks, there's cracks all over in the economy. There's these big issues. And it's like, okay, so which one is it? And then when I look at Tesla, sure, they've ran up 97%, 96% in such a short time. But at the same time, I know March 1st is less than a month away. And I'm sorry, there's a reason they're doing this March 1st. There's a reason. This isn't just something. This isn't just a shareholder meeting. Something's happening here. It's not just nothing. And I find it very hard to believe that we're going to sell off when we're so close to March 1st. Like, if anything, I see us running up into March 1st, right? Maybe selling off after March 1st, but not before. So I'm so conflicted. Like, I don't really know what's going on in the short term. And I'm not saying that matters. I mean, I'm all about long-term investing, but the short term is always extremely interesting. And I think you need to know the short term to be smart about the long term. But like, do you guys have any opinions on any of that? Like, can you guys at least pick one side of anything on that? I said a lot of things.
What the short? Yeah, I don't know what you want me to do.
Yesterday.
So like, look at Tesla. Like, do you really think that, to your point, Yoshi, do you really see that we could pull back to 180s right now when March 1st is right around the corner? Do you think anyone would actually sell right now? You do?
Yes. 100%. Yes. It's macro driven, right? I mean, of course, macro has helped us and there's been disproportionate buying this year. But yeah, I definitely think so. I mean, what's 180? It's like $16 on the downside. We've seen Tesla swing $100 here for give or take, right? So 100%. And remember, there's a slew of hedge funds out there that like to trade Tesla prior to big events and then dump post-event. We've seen it with Battery Day. We've seen it with these hyped up events that retail investors think there's going to be some magical announcement for that there isn't going to be. I'm really excited for Investor Day. Don't get me wrong. I'm really excited for the Gen 3 platform. But I'm more bullish on the run up prior that we've had now than I am now moving forward in the next 3 weeks. Maybe one or two more weeks of strength here, but the week prior to, I wonder if there's going to be some hedge funds that take some profits heading into that event.
So do you think we'll be over $200 by 3/1, or we'll be under?
The bull in me wants to think we're going to be over.
How much?
I don't know. I think we probably swing in this 150 to 200 range is my guess. I guess we'll see. But, if we're over 200 and by March 1st, like, trust me, I'm happy. But 150 to 200 is where my gut's telling me that we still probably live in until we get some clarity on it.
I mean, what's interesting is that we've sort of like recovered. We've had like a V-shaped recovery from, what was it, like the end of December? Like or like when
Yeah,
he
check it out.
bought Twitter, right? When was
Right
that?
here.
November 15th ish. What is that? November 28th. Yeah, so beginning of December to where we are now, it's like literally a V-shaped recovery. So we're back to where we
Yeah.
were, and a lot of that sell-off was what a lot of people are speculating: tax harvesting, Twitter overhang. You know, you ask you ask whoever you want, they'll give you a different reason.
Oh,
But
the
we've
man concerns.
recovered. Yeah, the main concerns, right?
Yeah.
I don't know, man. Yeah. Is March 1st in part about the board defending itself from activist investors? I don't think so. I think
Really? I think so.
Yeah,
really.
I think so too.
I think so. Man. Yeah.
It's just too convenient, like the time frame, right? Like
No,
right
you're
before the
right.
shareholder meeting.
You're right. You're right.
And
yeah,
that was announced in the midst of
you're right.
of $100 share price. So yeah, absolutely.
This is a great question. Shout out to you, Scott. It's but for anyone that's wondering, like Tesla pulled forward. So this general investors meeting on March 1st is essentially a preliminary setup for the annual shareholder meeting coming up, and that's happening way earlier this year. And it seems like with everyone talking about, oh, we need a revamp the board, we need retail investor ownership on the board and representation on the board. It seems like Tesla's getting ahead of the curve and saying, look, we're not here to try to mess up our board. We have a good system going. We don't need this. Let's pull forward that annual general shareholder meeting. And then also let's prime the investors by appeasing them a little bit and, you know, addressing some concerns that they may have at this investor meeting on March 1st. And I think Alexander Boomer Mama, Alexander Mers on Twitter puts it perfectly on the stream with you, actually, Farzad and Gary Black, where she talks about the ESG investor ownership and the risk there. So we don't need to get into that sort of whole rabbit hole, but we can get into it on another stream.
I was ready to do another hour. Just kidding.
But I'll let you guys go.
But so don't you think? So I agree with you, Ashu. Well, I'm assuming that you agree with this sentiment here, because I do think it is defending. And the only way to defend, the only reason to pull this forward is if you're going to have something good to say, something to get people excited, like, oh, damn, okay, let's not mix with the formula. Like we like what we see here, right? So there's got to be something exciting there. So that's why I feel like this can, like, I see us getting to 220. Like if you just had to throw a number out there, 220 over the next month. Like I think there's and that's mainly based off like volume gaps that you can see. So I think you could easily run up to 220, and then just having March 1st there. I feel like March 1st is like it's gravity for the stock price, saying it's not going to go anywhere until maybe right before or right after March 1st. So yeah, I don't know, but I think it's just too convenient. They announced this when it was the worst time for the stock, when Gary was yelling, Ross was yelling, everyone was yelling, get rid of the board, Elon doesn't need to be CEO, all this stuff was happening. They announced this.
Panic.
Yes.
Outright panic.
We don't need to get into the whole, I think you guys already know where I stand with the whole retail board investorship based thing. But
Yashi wants to be on the board.
Yeah, let's vote him in.
That's
everybody.
That's not
Juju
what I said.
Gang. Should we put Yashu on the board? Yes or no?
That's so delusional.
Every meeting starts with a bowl of Juju.
Can you imagine?
Everybody will get their vitamins.
Well, thanks to you guys. I have to clarify now. I do not think there should be any sort of retail prioritization of anyone on the board. For the record, for anyone listening, I think it's myopic. I think it's short-sighted. I think the board of directors should serve the mission. We need like a Tim Cook. We need like a Sheryl Sandberg. Like we need these high-flying executives joining the board that can bring network. We don't need little stockholders getting the prioritization of stuff like that. I don't think that should matter.
Ron Barron and JB Straubel will be my 2 votes.
That's Ron Barron less so I think than, but JB Straubel will totally agree.
Yeah, and I agree with Yoshi on that too.
Manages money.
Yeah, I agree 100% with you. Yeah, it's
somebody asked, should we do a guess the closing price? Oh wait, guess the closing price of board meetings. Oh okay, never mind. I misread it.
Oh, actually, we probably could do a closing price, because I don't think after hours is over.
No, it's closed now. It's closed. I believe it's closed.
Nah, we got another 7:59.
Do we?
Yeah.
Okay. But we haven't even said Emmett's, and this will be the last question. Buybacks. Will that happen March 1st? Is that happening this year? Thoughts on that? And we'll leave it at that.
If it happens, it tells a very positive story for Tesla in 2023. So that's the way I look at it. It's that basically means that the board and Elon have agreed that cash can be deployed to purchase stock back, and they don't think they need to continue building a surplus of cash to prepare for a potential recession. It sends a signal that says recession ain't gonna hurt us, and so we're gonna put the cash to good use. That's what I get from it. Which would be a big pivot from the sort of language and verbiage that Elon has been using as of late around, but like just being very paranoid about the economy, and that could be his way of sandbagging it potentially, just like he couldn't sandbag the 1.8 million delivery number for 2023. And it would be like a transitory, not transitory thing that the Fed did, right? It would be like a sudden 180. So.
Okay.
It would be a sudden change, but if you're really thinking about Tesla's prospects from a profitability perspective, the fact that demand seems quite strong everywhere, especially with the new pricing, and the fact that they're going to have economies of scale kicking in, energy ramping, they will have a surplus of cash, and so at some point they're going to have to do something with it. They can only deploy it so fast to grow so fast. So I'm going to say 50-50.
Okay, typical cop out.
60-40.
Okay, better.
Which way?
Wait, 60 yes.
You decide.
60-40, which
60. I want to say 60 yes. 60 yes, 40 no. Yeah.
You should have just been like
March
exactly.
1st, really? Wow, okay.
Yeah, I know. Missed opportunity. Damn it.
No, I don't think there's a buyback. I think well, not March 1st. I think March 1st is about products. It's about, like, if anything, master plan part 3 maybe. I don't think that March 1st will have anything to do with the stock price or the stock or anything like that. At least I hope it doesn't. I hope it's about what they're doing, products. Like, I'm conflicted. The new compact version of the vehicle, I kind of don't want them to announce it. I kind of would like to see Elon go to Shanghai and announce it there. But I think that's what what it'll be about. I'm with Yashu. If they announce a buyback, that's very bullish, not just on what they're seeing with the economy, and that would be a 180. But I would also say that
it's racist.
That's what he said. That's what Farzad said.
You called me Yashu, bro. I'm kidding. I'm joking. Oh, I said it.
Don't worry.
I'm so used to agreeing with him, not you.
Because it's an Oreo sandwich. Doesn't give you the right, bro. Yeah. Just kidding.
Yeah. I always agree with him, but yeah, I would also say that it's also probably really bullish on FSD beta, and this stream has lost all control.
Dude, we should do this more often. This is so fun.
Okay, I agree with you, Nick. It's not going to happen at March 1st. I don't see it happening. But if you were a bull like Farzad on this idea, you would point to the fact that they said we're going to talk about capital outlay and how we're going to use our capital, and you would say, well, how is that not about buybacks? And you guys know my thoughts on buybacks. It's not going to save the stock, folks. It's a long-term strategy. It's definitely a good signal, but it's not going to save anything. Not that we needed saving, and we're up 90% in the last month and a half. But so we'll leave on this. Oh yeah, Nick. Last
I was just gonna say, just how we're gonna capital allocation with gigafactories.
Yeah,
I think that's the natural.
Oh, connection. Okay. Yep, makes sense. And they don't want to Osborne their Model 3 sales anyway. So, but everyone tuning in, throw in your Tesla opening price guessing game. Hadouken, shout out to you for thinking of this. Never done this before.
That's nice.
Open it.
That's sick.
Remember, price the right rules. You have to be at or under still price the right rules to win the virtual juju.
Wait,
and
what
yeah,
time?
a little bit of a different timing stream. Right at open, so not pre-market, but right at 6:30 a.m. Pacific.
So wherever the candle opens,
we'll Tesla open up. Whatever the open, it'll say on my Weeble. I'll start. I'm gonna say we're gonna open pre-market 199. I think we're gonna open strong and then sell off to end the day. That's my guess.
Sorry, so the last pre-market price will be 199, or the opening pre-market price?
Opening.
The opening The first
Okay.
ticker at 6:30:00 will be
Eastern.
insert. 6:30 Pacific, 9:30 Eastern.
Okay, so the open, so not pre-market. So okay, so I just want to make sure. So
No.
Yeah.
the price once pre-market is
8:30 a.m. for
closed-
you. 8:30
Thank
a.m.
you.
for you.
Hey, listen, I got to
Yes.
get these things right, okay?
Texans,
Just because I'm a
man. These
mathematician
guys-
doesn't mean I'm good at numbers, okay?
What's your guess?
201.15.
Okay, you can get on the bullish side. So is Emmett actually. So John's saying 250. Wow.
250. Let's go. What are they
Buybacks
announcing?
announced half hours.
Bring him on. Bring him on. We
Yeah.
got to talk to this guy. He knows things.
Nick, what's your guess? 199 for me.
194. 194.34.
So we give it back.
I think we end higher, but I
Okay.
think tomorrow we break 200.
Chris
Wow.
thinks government's going to pump that inflation.
Yeah, that's right. State of the Union. I forgot, eh?
Oh yeah, Biden. Yeah. Wow.
Can-
my TV just turned
can
on.
we do
That's
this again?
Weird.
I didn't even know that. Wait, what? Why?
I'm gonna stick to
wait,
201
you already are-
because that's a good.
Yeah.
Somebody said that there might be a lot of pump behind the IRA, like EVs, and he might say Tesla during the State of the Union. I mean, you really think about it.
Yeah,
There's
right.
a big. I'm just saying.
No.
All right, let's put a poll on that one.
If,
Yeah, we
if
should.
Biden says Tesla, I will send you a Juju merch shirt delivered.
I
right
think he
to
will
your
say
house
Tesla.
If that happens,
I think he will say Tesla.
Zero.
I think he will say
chance.
EV leaders like our great American car makers like GM, Ford, and Tesla. Watch.
Ooh.
Yeah.
watch.
Right. Okay. Okay.
If
No,
I'm
it's not gonna
wrong,
happen.
if I'm wrong, I will buy a Juju merch item from your store and I'll wear it for your next stream that you have me on. I wear it for an
Okay,
entire week.
perfect.
I'm on it.
I shouldn't have
same.
said that. I shouldn't have said that.
Wait, you're so confident that he's gonna say Tesla that you're
No,
gonna
I'll
buy
wear it
a
on your
piece of
stream.
merch and wear.
I'll wear on your
No,
stream.
that's fine. I don't expect you to. I don't expect you to
Yeah.
start rocking my.
And I'll
merch on your stream.
donate one merch item to any one of your Juju gangs. Like
What
do a
else?
raffle.
Wow.
What else will you do?
Very kind. Very kind.
That's it. I'm done.
No, what else?
No,
Keep
screw
going.
you. I'm done.
You're retired. Keep going, you greedy billionaire.
Yeah, that's not how it works,
Dan's
bro.
asking, did you pay him? Okay, so hold on. Let's get this straight. If Biden says Tesla, that's what you'll do. And if Biden doesn't say Tesla, which is like the base case for me,
No.
then
I know. I'll wear
What?
a Juju. I'll wear the Juju merch and donate a Juju if he doesn't say Tesla.
if he doesn't,
If I
but
lose
then
the
I'm on
bet.
board with you.
No,
Wait,
no. Hold
If
on.
I lose
All
the
right,
bet-
all right, hey, hold on. Let me
Okay.
play referee
Go
here.
ahead,
all
ref.
right? Because I wanted to
Okay.
be in this, but let me referee instead. If he says Tesla, then Yashu has to send Farzad a shirt.
Yes.
However,
correct.
if he does not say Tesla, then Farzad will purchase a Juju shirt.
Right. Okay. Yes.
and
yes, correct. Okay.
and donate and
And-
additionally donate a Juju merch item through a raffle that's on your channel.
We'll do
And
We'll do
he will
Tesla
also
business kit.
shave his beard.
Okay, no. we're
and
done.
he'll
We're doing enough.
also donate $100,000 to no. Okay.
Nope.
To Nick,
okay.
to Nick's
Trying to
new
buy more
house
Tesla
fund.
stock, bro.
Okay, that's such a safe bet. I'll take that any day of the week.
Okay. Fair enough.
No chance he's gonna say Tesla.
Now I gotta watch this damn
All right.
State of the Union.
Yeah, no, you were gonna
Just
watch
chat
that.
GPT.
Fantasy football. Now I'm gonna watch shitty
Yeah.
football team.
No,
You know,
just-
like see if I get points.
All you have to do, ChatGPT, give me a script of Biden's speech, Command F, Control F, depending on your system, Tesla.
Yeah,
Not happening.
Done.
fair enough.
No,
Yeah.
not happening.
2 seconds.
Actually, I do kinda
I'm
wanna
so
watch it, to be
confident.
honest.
I'm so confident in this. This is gonna be great. I'll match you. If he says Tesla, of course. So if he says Tesla, I'm gonna buy you a merch. I'll send it to you, and I'll give away a merch.
Perfect.
Farzad, you're just gonna let
Okay.
him match you? You
Even.
were one up on them. Like,
Hey,
what
no,
is
it's
this?
okay. Don't try to instigate this, bro. Get out of here. Just because you're in the middle doesn't mean.
Evan said,
And
I'll
by the way,
donate a share of Tesla.
Yashu, next time wear the right
Yeah.
color. Didn't you get the memo?
Yeah, what the
Yeah,
heck?
right?
I don't even think
You
I
got
have
the
a
wrong
great
shade gray, bro.
I feel like if I
Emmett
go
joking in the
over
chat.
here,
Donate a Tesla to anywhere you
A
want.
it's
A
Biden
short.
says-
Here, I'll read it out. I'll donate a share of Tesla to anyone if you want. If Biden to pronounce in his slurred speech Tesla.
Tesla.
Well, that's how it's coming out.
I think that's how Elon even says it. To be fair,
Yeah.
so
Yeah.
All right, guys. Much love. I'll let you guys get to your State of the Union American stuff going on. I'm gonna go watch some hockey, and I can't wait to win this. And we'll get everyone. Hopefully we can get everyone together for the giveaway as well. Either way.
Yeah, dude, we should do this more often. This whatever we've got going on here. If y'all got the time, I would love to. Whatever we should do this more.
Let's do it.
This is so fun.
Yeah,
So
my
fun.
life
And-
shows
and-
out after this week.
Yeah.
Absolutely. No, I totally get that.
Yeah.
And after hours, it seems like is kind of the time where everyone can unwind, unravel, and kind of just like end the day with. So maybe I'll start doing after hours stuff a lot more. But
Yeah,
we'll
love
keep
it.
it going.
Ooh, Yashu and
no, wait.
blueberries. That's a good.
That's right. I was just gonna say I keep on trying to end this stream, but I keep saying if I lose, I can't buy my own merch. I have to buy your merch,
Yes.
and then donate a piece of merch. Yes,
and
okay,
it has to be the
fair.
blueberry
That's fair.
shirt. It has to be the blueberry
Yes.
shirt.
Fair enough. Fair enough.
Done.
Okay. Yeah, done. I mean, it'd be kind of weird if I lost and I bought my own merch. Okay, sounds good. Thanks, guys, for tuning in. Go watch State of the Union. Go have fun. And that's it. Peace out. Take care, everyone.
Bye,
Peace, guys.
everybody. Thank you.
And go check out their channels. Links are in the description.
Yeah.